It's Tuesday, May 27th. Let's level up. Market had a pretty solid rebound today given the news that President Trump postponed the EU tariffs. Not so surprising, but they did come to the table, and I guess he's giving them a little bit more time. As far as markets go, it is a very simple setup here. As far as VIX goes, I think today's high of day of 2101 is a good pass-don't pass line. Anything above that could see still higher volatility. Remember, we did get the bounce off the channel low, and we were able to make it up to the 2376 to 2480, but we weren't able to clear it. The 50 MA really held it back. So we now know the 50 MA is the key MA, and that's all the way up at 2522. On the downside, we could be painting ourselves into a little bit of a corner here because 1896 is the channel low again, so there's not a lot of room to the downside. I'd say for the bulls, for a real solid still leg higher, not just range, they need to crack the 1702 in particular. With regard to the ES and the NQ, we now have inverted head and shoulders patterns here with necklines at 58.95 and 21,337.5 respectively. As far as the ES goes, the bulls will need to hold that 58.95 neckline. I could see there being some wiggle room in this area because if you go back to the Wednesday when President Trump announced the tariffs on the EU, the VWAP from that day was 59.05, and today's VWAP, which by the way was a bit of a rich close, was 59.12. So I'm thinking that 58.95 to 59.12 area is a must-hold zone. It's roughly basically 5,900. So if the bulls can hold that, the key projections on the upside would be 60.33.5 and 61.19, of course, with 6,000 being a key level in between there. In the Qs, if you took it to the same logical conclusion, the two back-to-back VWAPs from today with the rich close and from EU tariff day was 21,323 and 21,361.5. So generally that area with the neckline, by the way, being at 21,337.5, the projections on the upside could take us to 21,948 and 22,325 quarter. Very simple. As long as the bulls can hold that general zone, those necklines and those VWAPs, it's all good in the hood for still higher prices. Below that, to me, starts becoming problematic because what should happen doesn't happen, meaning go higher here with an inverted head and shoulders, then I think there's risk of a much larger retracement. With regard to SPY, super simple here. We did have a move down. We held the 200 MA. We did hold the 575.35. We never filled the 5.9 gap to 564.34, so carry that forward as a potential downside target if there is failure here. But as long as the bulls are above 585.10, which is the 78.6, the 613.23 all-time highs are back in play, of course with reference resistance at 600 and 610, and then of course the 613s. But as long as the bulls here can hold the 585.10 area, they are fine for still higher prices. Below, I do think sees the liquidation break back down to the 575.35 and maybe fill 5.9 gap to 564.34. Qs are similar. We have this big resistance zone between 511.19 up to 540.81. We had gotten into it, we fell out of it on Friday, but now came back into it, so I looked at it as a look below and fail. Anything above 511.19, still higher prices. Below there, I think could risk the move to 499.70, and of course the 5.9 gap fill to 487.97. On the upside, I see some resistance coming in at channel high at 527.52, and then from the 12/18 Fed day high at 536.88 up to the all-time high at 540.81. So technically that should be in play. If you want to use a interim pass-don't pass line pretty much on anything across the board, 10 MAs are good. In this instance, it would be 517.48. I also think that you don't have to wait and stand on ceremony with 511.19. I think today's low of day at 514.59 is a very good stop. If we get below there, I don't know that the 511 would hold. We shouldn't get below today's low. TLT back over the 84.89 neckline. Anything generally over the 10 MA at 85.37 is good for still higher prices. 20 MA is 86.63. If we keep going, we could make a move back up into the 87s, 88s, and maybe even retest the 90 level. I think that as long as the bulls, though, can hold 84.89, it's fine. Below there does get a little bit more problematic. Is Bitcoin at risk of another look above and fail? Yeah, very possible here. The 10 MA 107,184, very key, must hold for me. If that fails, I think we're coming down to the 20 MA at 103,184 to the 78.6 at 102,554. Bulls here need to hold 108,960 and get over 110,150. Anything below 110,150 does technically risk the look above and fail, and we are a little bit below there here. Gold's still hanging in there. It needs to hold the 20 and 10 MA zone, that 300.95 up to 302.88. Anything below there, I think, retests the 50 MA at 295.38, and we've already retested the 50 MA. Remember, the first touch I thought was a buy. Second, maybe smaller size. If they are able to pump it back up, channel high comes in at 312s. I've told you before, we are in a bit of a bull flag down auction channel. It's not very defined yet, and it still is in the context of an up channel, but we are starting to make some lower highs and lower lows, so stay a little bit frosty there. We've been bullish on Tesla. I told you on 5.9 when we had the gap and go over the downtrend in the 200 MA, I thought we were going to see 319.03 to 325.10. Next upside level was 351.39. We're comfortably above there. By the way, that is the must hold now. And the next resistance comes at 373.04 to 383.76, which is the real breakdown zone below the 61.8. I do think there is some potential still further upside in Tesla. Just don't let it get below 351.39 on you, or it's a stop. Apple getting a bit of a reprieve today, back over the 200 level. The 203.93 up to 208.42 could present some resistance. Then there's a bit of a vacuum up to 214.66 to 219.38. I told you before, I think Apple's a good opportunity to sell some out of the money strangles, sell out of the money puts, sell out of the money calls. If you want to do an iron condor, that makes some sense with some higher IV. Right now, I think that there is some upward drift maybe into the Worldwide Developer Conference on June 9th. NVIDIA reports after the bell on Wednesday. That is going to be a big deal. I don't love that it's rallying into the number. I do see some next levels resistance at 138.90 up to 143.44, and then of course the 152s, which was the all-time high. If there is a dump, I could make the argument we would see the 100 MA at 122.18 and likely retest the 119.88 50% fib. I think that that is going to be very key for the balance of the week, of course, with sentiment in NASDAQ. Amazon is looking pretty bullish, but needs to clear the 100 MA, currently 206.33. If it does, there's a little bit of a pennant fill to the 214.85. I ultimately think this could make it back up to the 219s, 220s. They have Prime Day coming usually mid to late July, so it's probably a long into that. I'd be a dip buyer there. Google, we were one of the few bulls on this, and I had said it was a buy the dip on the Eddie Q dump day on 5.7. It took a few days to shake out, but bulls there, as long as they can hold the 200 MA, 171.05, I think the risk is upward. I do ultimately think this can make it back up into the 181s, but that area is probably an area to sell into. Generally speaking, I like using up opens to lock in some gains and maybe put on some hedges. We are getting closer to the highs. The risk reward isn't the same as it was when we had that first breakout, much lower. Been on this rally for a while. We have trimmed along the way. We've also done some reloads at opportune times. Don't try to force the market to pay you. Trade to trade well, make good trades. Don't do it to try to force it to make money. That often winds up in losses because you get stopped out usually late on the trade. Like doing spreads, I think that mitigates risk to some degree. So if you're normally a naked call buyer, maybe do a spread. Buy a call and then sell a still higher upside call. Yes, it does limit your gains, but it also helps with time to gay and limits some losses. If things go against you, you could always roll that upper strike down, bank some of that upper premium, and then take in some more at a lower strike. Like and follow for more.